Hey everyone, welcome back to Corporate Decoder. Today, we're diving into Bancorp 34's latest 10K filing, and let me tell you, it's not your typical bank story. This isn't just about numbers. It's about a small bank trying to make a big splash in a consolidating market, almost like the little guppy swimming with sharks. This report is more like a soap opera plot, because after a major merger to scale up, will they sink or swim? First off, let's get grounded. Bancorp 34 isn't exactly a household name. They are a Maryland-based company that operates Southwest Heritage Bank with a focus in Arizona and New Mexico. Think local, think community banking. The bank has been around a little while but got more traction in the past few years. The main headline is the merger with CBOA Financial, completed in March. It's a big deal, essentially a smaller fish getting eaten by a slightly bigger fish, which is what they believe gives them the scale to really grow. This kind of thing is common to give them scale. The report acknowledges with required cautionary language that maybe the integration of CBOA doesn't go as planned, maybe they can't keep key staff, or maybe they'll stumble integrating operations. This is the real-life version of expectations versus reality for mergers. Moving on, let's talk risks, because every good story needs a bit of suspense. The report acknowledges everything from economic conditions to cyber attacks to being unable to keep up with regulation or technology. These are not just words, but very real threats that could throw their plans off course. The document highlights sensitivity to changes in the economy. If the areas they operate in, Arizona and New Mexico, struggle, so will Bancorp 34. It's all about managing credit risk, especially with commercial real estate loans being a big part of their portfolio. If property values drop, they could be in trouble. They have a lot of commercial real estate loans. Those are loans to businesses, so if those businesses can't pay or if property values fall, Southwest Heritage could really be affected. This is the risk of putting too many eggs in one basket. The bank also admits that they are sensitive to what happens with interest rates. If rates rise quickly, that can hurt how they make money and can impact their investments. So if there is a recession or interest rates rise, the bank may not meet goals. Of course, they have the usual fear of tech problems, including cybersecurity. A failure in their systems could mess things up. They experienced an issue in June of 2023 where the email accounts of a few employees were breached. While this was minimal, these incidents can have huge ramifications for banks and clients. They also spend a lot of ink talking about how laws and regulations affect them. It's a minefield because they're not large enough to have the resources of a JP Morgan, but they still need to follow the rules to a T. Compliance is costly and can limit their activities. As a smaller bank, they face risks with capital and liquidity. If they need more cash and can't get it, or if folks start pulling their money out, it could really hurt them. They may be required to put more capital to back the bank up, which may also not be ideal. The acquisition of CBOA may not give them the results they want. It could be hard to combine operations, it could cost more than anticipated, or they could lose customers and employees along the way. The report specifically notes a number of issues. They depend on the company's key people, and if they leave, that could hurt the bank. They will need to invest in new technology which could cause issues. There is no guarantee that market disruption trends that have benefited them in the past continue, and the company may be unable to attract new business. So what's the plan to grow? First, they plan on using relationships to grow organically. They want to grow their core deposit base because more deposits means more available funds to make loans and build their business. They also plan to keep expanding in their target markets, Arizona and New Mexico, to gain more market share, and will look at more mergers and acquisitions to expand the business further. A covered savings association means they have the same rules as a national bank, except in certain areas, which adds a layer of complexity. Let's talk financials. Scrolling down, their branches in Arizona hold about $622 million in deposits across 6 branches. In New Mexico, it's $151 million across just 2 locations. The report notes that about 25% of total deposits are uninsured, meaning they exceed the FDIC deposit insurance limit. These are the numbers that tell the story of a community bank trying to grow and compete in a world of giants. There's nothing listed on the stock market, and the market cap is not great. At about $45 million, the bank may be hard to acquire, may be hard to get capital if needed, and has less prestige overall. However, the bank appears to be managed well, is not a shell company, and is not an emerging growth company. Finally, it is worth mentioning the changes in leadership structure. Post-merger, Kieran McMullen is now CEO of both Bancorp 34 and Southwest Heritage, and Chris Webster is president of the bank. It's all about getting the right people in the right spots to guide the ship. The board has also determined that most directors are independent, so what's the overall picture here? Bancorp 34 is trying to grow by acquisition in an industry where bigger is generally seen as better, with an emphasis on commercial and consumer banking. They are focused on Arizona and New Mexico, but also face competition, economic uncertainty, regulatory costs, and potential tech problems. The bank is also hoping to grow the deposit base as well, which may affect them fairly quickly by changes in monetary policy. Their strengths seem to be that they want to be in faster-growing markets with less competition. They are taking advantage of big bank consolidations to pick up talent and customers. But is it a sound strategy? They will need to manage risk better as a larger bank, and they will need to make sure costs do not increase. This is all a high-wire act. It's about balancing growth with risk and hoping that their bets on these markets pay off. Whether they succeed, it depends if they can make this acquisition work for them, and more broadly, whether the economy favors them or turns against them. Thanks for watching. Hit like and subscribe, and tell me what you think in the comments below. See you next time on Corporate Decoder.